Welcome back to the second textbook opportunity of the day for February 1. Focusing on the 60-minute chart on the left, you can clearly see that anyone who was running a trailing stop below previous lows would have been stopped out. In the process of the bar or the market breaking the previous hour's low, examine the range. The range is smaller than the bar before, albeit it has a lower low and a lower high. The close is above the halfway mark, clearly signifying that the sellers are not the dominant force. It may well have been a bit of profit taking by those longs who were aware of the top-down approach and caught the rally. Or perhaps people who were selling near the top were driving the market down. Be that as it may, this last bar on the hourly chart does present a textbook buying opportunity courtesy of the L.I.V.E compendium. It's called a VT, V for victory, T for Thomas. With apologies to the sound of music, it's called a Von Trapp buy. The concept being, people who went short the market near the highs of the hour, seeing the lower high, probably will move their stops down. Secondly, those who hadn't caught the rally, the Johnny-come-latelys, may be looking to buy in the break-up. So either way, we're looking to capitalize on a potential burst of buying activity above the high of the hour bar. Turning your microscope up to look at the 30-minute chart, you can clearly see the last bar is a coil. Translation, an inside period. The quiet before the storm, so it's reinforcing the potential for a significant movement. Let's now focus on the 15-minute chart. The 15-minute chart has provided the first part of the idealized sequence of L.I.V.E setups. The first part being a fake out buy, which occurred 3 bars ago, and now the last bar, having a lower close in the previous bar, is a retest variation of this spike low. So the order should be prepared to go long on the break of the high of that bar, with your initial stop loss beneath the low of that particular bar. So the top-down approach is saying, from the hourly, this is a Von Trapp buy, looking to buy it, reinforced with the 30-minute view, and also the 15-minute view allows you to finesse your entry point and your initial stop loss, of course. The next 15-minute bar comes along, it hasn't broken the high. Significantly, it hasn't broken this previous spike low, so it's yet another retest variation buy. So this time you're looking to enter on the high, or just above the high of the last bar, with your initial stop loss just below the low of that bar. Either way, it's a limited risk campaign, outcome unknown. The next 15-minute bar comes along, entry has been achieved, you haven't been stopped out, has a higher high and a higher low, and more significantly, it's a promise of higher highs to come, courtesy of the expanded range. The 30-minute bar by now is finished as well, so let's have a look at that one. And that one has a higher high, higher low, and also an expanded range. So another promise of higher highs to come. Statistically, promises of higher highs are fulfilled about 70-75% of the time on the very next bar. Similarly, a promise of lower lows, simply an expanded range with a lower low and a lower high, also has the same probability of around the 70%, 75% that on the very next bar it will be fulfilled. So far all is well. Next 15-minute bar, and certainly the previous promise has been fulfilled by this 15-minute bar, and that in itself is also yet another promise of higher highs to come. The stop would be raised from the trailing stop loss there to a higher trailing stop loss, locking in about a 1 hour return already. Not bad for half an hour's work. Next 15-minute bar comes along, the trailing stop loss gets raised from that low to that low, locking in 2 to 3 hour return on that long campaign. By now, the 30-minute chart, the 30-minute that period has rolled over as well, and that's what it looks like in real time. So what you're seeing is that we closed off the highs. Clearly there was a bit of profit taking, some selling coming in to force the price down from the high of that bar to the close where it was on the 15-minute bar. The hourly bar by now is finished as well. and that gives you a similar picture whereby it's a promise of higher highs, as is the 30-minute one, and closing off the highs. The stop loss formally would be raised to the low of that last 15-minute bar, and you'd be stopped out on the very next bar. So what I've shown you in this little video is the power of harnessing the top-down approach using the hourly for your setups, the L.I.V.E setups, and to give you the direction. The 30-minute chart reinforces the direction. In this case, it was neutral, courtesy of an inside period. Simply the coil was saying the market is primed for a strong movement. And then finally, the icing on the cake was a little retest variation buy on this little bar there that gave you the entry and the initial stop loss to capitalize on the 3-odd R return in what, 45 minutes? So thank you for watching. I really do trust that it's helping you cement the concept of using a top-down approach together with the L.I.V.E setups, of which there are 12, to take some R's out of the market. Thank you, over and out.